Assalamualaikum warahmatullahi wabarakatuh. My name is Danish bin ADLIN SISWAIRI and my ID number is 622-111-24709. So today I would like to present my individual assignment for Islamic financial product and services. So first of all, welcome to my presentation on Islamic finance solution for Awas Sendaran Berhad. Islamic finance offer ethical and innovative financial solution that adhere to Sharia principles. These principles ensure that financial activities are free from interest, which is riba, promote social responsibility, and align with values of fairness and transparency. As this framework gains global traction, it presents an excellent opportunity for businesses to achieve growth while maintaining ethical compliance. For Awas Sendaran Berhad, we propose a comprehensive 500,000 financing package. This includes murabaha for equipment purchase, musyarakah mutanakisah to support facility expansion, and the last one is Qard Hasan, a loan for working capital. This combination ensures the company achieves its growth goal while remaining fully Sharia compliant. Now, let's take a closer look at Sharia compliant financing structure proposed for Awas Sendaran Berhad. The 500,000 financing package is divided into three key components. First one, murabaha. This financing method is allocated 250,000 for equipment purchases. Under murabaha, the equipment is sold at an agreed profit margin, making the process transparent and fair. The second one is musyarakah mutanakisah. This component provides 100,000 for facility expansion. It operates on a diminishing partnership model where ownership is gradually transferred to Awas Sendaran Berhad as repayments are made. The last one is Qard Hasan. Lastly, 150,000 is set aside as an interest-free loan for working capital. This ensures the company has the liquidity needed to manage day-to-day operation without financial strain. So, together, these components form a robust structure to support Awas Sendaran Berhad growth while maintaining compliance with Islamic banking principles. Next, let's now dive into the first financing component, murabaha, also known as cost plus sale. Murabaha is an ideal Sharia compliant model for financing tangible asset like equipment. Here's how it works. First, the bank such as Selamat Islamic Bank purchases the required asset, for example machinery worth to 250,000 ringgit. Next, the bank sells the asset to Awas Sendaran Berhad at an agreed cost plus profit price such as 300,000. This ensures transparency as both parties agree on profit margin upfront adhering to Sharia principle. Finally, Awas Sendaran Berhad repays the 300,000 in installment over a predetermined period. This financing model avoids riba or interest and ghara, which is uncertainty, aligning perfectly with Sharia compliance while ensuring both parties benefit from a fair transaction. Moving on, the second financing component, musyarakah mutanakisah or diminishing partnership. This Sharia compliance solution emphasizes co-ownership and equitable risk sharing, making it an excellent choice for facility expansion. Here's how it works. First, co-ownership, which is Selamat Islamic Bank and Awas Sendaran Berhad jointly own the asset, in this case, the warehouse required for expansion. Next is installment. Awas kenderaan berhad gradually buys out the bank share by making regular payments. This payment include a rental portion for the bank's share of the asset. The last one is ownership transfer. Once all payments are completed, ownership is fully transferred to Awas kenderaan berhad, making them the sole owner of the warehouse. Additionally, this model ensures equitable risk sharing where both parties share risks like property, depreciation or maintenance costs, and it includes regular asset valuation to maintain transparency and compliance with mutual agreed terms. Finally, let's explore the third component, Card Hasan or the benevolent loan. Card Hasan is an interest-free loan designed to support working capital needs while emphasizing mutual cooperation and social responsibility. Here's how it works. First one, bank provide loan. Selamat Islamic Bank lends 150,000 to Awas kenderaan berhad as a part of their working capital support. Second one is fund utilization. Awas kenderaan berhad utilize this loan to enhance its operation such as inventory expansion, marketing initiative and staff training, ensuring sustainable growth. The last one is repayment. Unlike conventional loans, Card Hasan requires repayment of only the principal amount. There is no interest or profit margin charge, making it fully aligned with Sharia principles. This approach avoids riba and promotes ethical financial practices, offering a social responsible solution for Awas kenderaan berhad business needs. Next, to ensure complete Sharia compliance, all our financing solutions adhere strictly to Islamic finance principles. These principles are embedded in every product we offer, ensuring ethical and responsible financial practices. First one is avoidance of riba. We eliminate interest-based transaction and replace them with profit sharing or fixed price structures, fostering fairness and equity. The second one is transparency. Clear contracts and documentation prevent any form of uncertainty or gharar, ensuring that all terms are straightforward and well understood. The third one is asset backing. All transactions are tied to tangible asset or real economic activities, avoiding speculative practices and ensuring meaningful contribution to the economy. The last one is Sharia oversight. An expert advisory board supervises all transactions, ensuring strict adherence to Islamic finance principles and maintaining trust and integrity throughout the process. Next is risks and challenges. While our Sharia-compliant financing solutions provide ethical and innovative alternatives, it's important to acknowledge the potential risks and challenges associated with each product. These risks require careful management to ensure successful implementation. For the first one is murabahah risk. This includes market volatility, payment delays and potential compliance issues stemming from unclear documentation. For the second one is murabahah mutanakisah risk. Risks here include property value fluctuation, delays in ownership transfer and possible dispute over maintenance responsibilities. The last one is Card Hasan risk. The main challenges are the risk of default, the opportunity cost for the financier, and the potential for fund misallocation if not managed appropriately. By identifying and addressing these risks, we can implement mitigation strategies to ensure that our kenderaan berhad benefits from the full potential of this Sharia compliant solution while minimizing any negative impact. So next is risk mitigation strategies. To address the risks identified earlier, we have outlined key risk mitigation strategies to ensure that all financial products remain Sharia compliant and effective. For the first one is transparent pricing. Clear documentation of costs and margins in murabahah agreements reduces ambiguity and promotes trust between all parties. For the second one is property insurance. For musyarakah mutanakisah, mandatory insurance coverage ensures protection against property-related risks such as damage or loss. The third one is fund utilization monitoring. Regular oversight of Court Hassan fund usage ensure that the loan is used responsibly for its intended purpose, reducing the risk of fund misallocation. The last one is Sharia Advisory Board. An expert review board oversees all contract and operation to maintain strict adherence to Islamic finance principles. These strategies ensure a balanced approach to managing risk while upholding ethical standards and fostering a successful partnership with our Senderan Berhad. So next is competitive analysis between Sharia compliant and conventional finance. Let's compare Sharia compliant finance with conventional finance to highlight the unique advantages offered by Islamic financial products. For the first one, Sharia compliant finance. Sharia compliant finance avoid riba, which is interest, and gharar, which is uncertainty, ensuring ethical and transparent transaction. Next, promotes risk sharing and equitable practices. Next, ties financing to tangible assets or productive economic activities. The last one is emphasize fairness and transparency in every transaction. For the conventional finance, relies on interest-based lending, which may create financial burdens for borrowers. Next, transfer most risk to the borrower without equitable sharing. Next, often involves speculative or non-productive activities. And the last one is creates uncertainty through fluctuating interest rate. So this comparison highlights the ethical and practical advantages of Sharia compliant financial solution for businesses like our Senderan Berhad. Now, let's explore how murabahah, which is cost plus sale, differs from conventional loans. First one is murabahah. The bank purchases the asset and sells it to the client at a fixed profit margin. Next is fully adheres to Sharia principle, ensuring ethical compliance. Next is the bank assumes of ownership risk until the asset is sold to the client. Next is profit margin and repayment terms are disclosed upfront, providing transparency. For the conventional loans, loans are disbursed to the client and repaid with interest, which violates Islamic finance principles. Next is the client bears all risks related to the loan's usage and repayment. The last one is conventional loans, interest rate may fluctuate, causing financial uncertainty. So this comparison clearly shows that murabahah offers a more ethical, transparent and risk-managed alternative for borrower. So next is comparison between musyarakah mutanakisah with conventional mortgage loans. For musyarakah mutanakisah, it involves a partnership where the bank and client jointly own the property. It also fully adheres to Sharia principle, promoting fairness. And next, both parties share risk during the partnership period, ensuring equitable financial responsibility. Ownership is gradually transferred to the client as payment are made. So, for the conventional mortgage loans, banks provide interest-based loan for property purchases which is not Sharia compliant. Next, the borrower bears all financial risks associated with the loan. And the last one is the bank holds a line on the property as collateral until full repayment, which may create financial strain. So this comparison highlight how Musyarakah Mutanakisah offers a more ethical, collaborative and transparent financing option for businesses like Awas Senderan Berhad. So lastly, comparison between Qard Hasan with short-term conventional loans to highlight the unique benefits of this benevolent financing model. For Qard Hasan, it is an interest-free loan provided as an act of benevolence. It also fully adheres to Sharia principle, ensuring ethical compliance. Next, the bank bears to the opportunity cost and risk associated with delayed repayment. The last one, by eliminating interest, it significantly reduces the financial burden on the borrower. So next, for the short-term conventional loans, these loans are provided with interest, often at higher rates. Next, they are non-compliant with Islamic finance principle due to the involvement of riba. The client bears to the full burden of repayment, including compounded interest. The last one is high interest rates increase financial pressure on the borrower, creating additional challenges. So, this comparison underscore how Qard Hasan emphasize affordability, ethics and mutual benefit, making it a socially responsible and borrower-friendly financial option. So, in conclusion, Islamic Bank's Sharia-compliant financing strategy offers a robust combination of murabaha, musyarakah, mutanakisah and Qard Hasan to support Awas Senderan Berhad's growth while strictly adhering to Islamic principles. However, achieving success relies on key implementation measures, which include: first, clear implementation plan, establish structured timelines and assign dedicated product teams to ensure smooth execution of the financing solution. The second one, risk management. Implement robust monitoring system for repayment and usage, minimizing potential financial risks. The third one is Sharia compliance. Maintain regular Sharia board oversight and audits to ensure all activities remain aligned with Islamic finance principle. The fourth one, training programs. Provide focused education for staff and clients to enhance their understanding of Sharia finance and ensure effective participation in the process. So by combining strategic implementation, strong governance and comprehensive training, Islamic Bank can support Awas Senderan Berhad in achieving sustainable growth while maintaining its commitment to ethical and social responsible financing. That's all from me. Thank you.